Hello, everybody. Welcome to the afternoon live stream. It is October 17th. It is the day when Netflix announced their earnings. And I'm going to be going in detail through the Netflix earnings and go over a couple of other companies. But a good part of this live stream is going to be analyzing Netflix, going through their earnings call, their financials, and updating my valuation model on this company. Before I jump in there, just want to remind everybody I stream in the morning, I stream in the evening, and you are tuning in on a Thursday at 5:30 Eastern, which is my regular time and day. I apologize that I couldn't make it yesterday. Something came up at home that I needed to attend to, and I apologize that I couldn't stream yesterday. So in the future, there'll be a day or two when I cannot stream, and I apologize for that in advance. But I am a one-man show, and on some days I'll just have to call in sick, so to speak. So, in addition to my streaming, you can follow me on Facebook and Threads, and you can engage with the community on Discord. So, check us out on Discord. It's a very good server. Talking about stocks, talking about investing. I encourage you to check it out. Just beware of scammers. And then lastly, become a paid member of the community. You can get really nice perks. Specifically, we're going to have our first workshop meeting this Saturday where we're going to get together, and it's going to be on a Google Meets call so we can talk through a valuation, talk through analyzing financials, and getting into valuations of companies in order to analyze companies that we are interested in. That's an example of one of the perks, as well as the investor call on Sundays that you would be invited to. So take a look. It'd be great to have you as a member, and there's details on the stream description that you can take a look at. So with that, let me take a look at the primary stock that I'm going to look at today is going to be Netflix. And Netflix doesn't need a whole lot of introduction. I think probably most people that are tuning into the stream are probably Netflix customers. I've been a Netflix customer for a long time, and I'm quite happy with the service. So it looks like an after hours trading, the market likes what they heard out of that announcement. It is up almost 5%. This is a big cap stock with a valuation nearing $300 billion for this streaming company that was one of the original streamers of movie content and entertainment content. So I'll take a look at Netflix in detail. Before I jump in there, just wanted to check out the main indexes. What is a surprise is that they ended so flat today. They were flying quite high, especially the NASDAQ was flying quite high this morning, probably mid-morning. It was doing quite well following the announcement from TSM that had really good earnings. And I'll revisit that earnings a little bit after Netflix. But that is interesting that even the S&P ended in negative territory just slightly. But that was a big turnaround. Netflix ended today down 2%. But now it's recovering that loss in the after hours because the earnings were perceived to be positive. Earnings have been out for about an hour. Let's take a look at where Netflix is and take a look at their financials. So the company announced their earnings. In general, it was positive news. I'm so impressed with the fact that they're able to grow their user counts substantially and grow their revenues. So they can grow both members of their streaming service as well as prices. So they have a quite strong following. Yours truly, again, I've been a customer for a long time and have been giving them my monthly dues for a long time. I don't know that I'm going to end my subscription of Netflix. And the other subscription I have is to YouTube. I love YouTube. Those are my two go-tos. And Amazon provides their Prime members access to their video streaming. So those are the big three in my household. Back to Netflix, they grew in the current quarter. They grew by 15%, which is very impressive. And their Operating income is there. Earnings per share were really solid. And they're guiding for Q4 for it to be really good. In Q4, they're expecting growth to be 14.7, very good growth. Operating income to be nice and healthy. Margins are going to drop a little bit in Q4. I don't know if that's going to be a big worry for anybody. It is substantial though. It is dropping like 8 full percentage points down. The free cash flow is rebounding. You can see that in the prior quarter, the free cash flow was not as good as it could have been. Free cash flow had dropped like $1 billion, but now it's come back to above 2 billion. So I'll update that on my model and show you where I'm at with that valuation. And they've been buying back shares. Good job. They produce good free cash and they're buying back shares. I'm going to look at just do a flyby on their financials. This is tiny. It's very hard to see. But what I did is I took their balance sheet items and I put them into my valuation model as well as their cash flow. And what's good about Netflix is they provide plenty of information for investors to look at their company and evaluate how they did. I appreciate that. That's very cool that they do that. So I updated all the information that I needed. I'm looking at a free cash flow forecast that is basically, I'm taking their year-to-date free cash flow and annualizing that number by taking the free cash flow for the first 3 quarters, dividing by 3, and then multiplying times 4. And then trying to do a forecast based on a 10% growth rate. That might be a little bit conservative, and then having a healthy growth in the terminal value. So this is all the cash flows I expect the company is going to produce in the future, which is substantial. The discount rate, I moved to 7.5 since interest rates are dropping. I moved it from 8% to 7.5, which gets me to an intrinsic value of all those cash flows of $316 billion. Cash increased a little bit. Very good. Debt also increased a bit. So I add cash, take away debt, and I get to an equity value of $309.6 billion. And the market cap's 295. So there's a slight discount. If you look at the cash flows, they're going to produce discounted at 7.5%. There's about a little discount of 5%. And if we look at earnings per share, it's supposed to be a healthy number in 2025. I'm using 2025 numbers. And I'm going to use a PE of 24, grow it by 15%, which is pretty much at their sales growth rate. And that gets me to a valuation that shows that the stock's actually at a premium of 6%. So in general, it's a fairly priced stock. Netflix is fairly priced. It's a good company, really good company to have. And I've owned Netflix. I've owned it as recently as 2024. I've done well with Netflix. It is a winning stock for me, but I'm currently not a stockholder. I just think that it's a good company, but I'd rather hold Google Alphabet, which has YouTube, and YouTube is the biggest streaming platform in the market. It has more users and than Netflix, and is growing much faster. So I think YouTube will continue to be just a powerful player in that space. And I decided to sell my shares of Netflix at a good profit and really focus my investment into Google Alphabet. But that is Netflix. They announced today they were up about 5%. And we'll see where they go. It looks like Mike, the dividend investor guy. Good evening, sir. Good to have you. You got back into Elevance. I bought some shares of Elevance today. It really tanked, but let's see where the stock ended. So the stock was down as much as 14%. When I bought my shares, I bought 2 shares today. It was down 14%. It recovered a little bit, but it's still a horrible day. And it really came down. I believe that Elevance is highly discounted. I think I went through that earlier today in the live stream, but I could show it to you again. When we look at the Elevance valuation, which I updated today, Elevance is an insurance payer. It's an insurance company that people buy their health care from. I calculate that it's really discounted if you consider that this is a very steady company that continues to grow their revenue. Even the most recent earnings, they grew their top line revenue. The problem was that their profitability wasn't as good. Their costs had been going up, and the market really punished the stock, needless to say. And the same thing happened with United Healthcare. This is an industry that I like because it's stable and it's a really, especially in times when safe stocks are the place to be. This is one of my safe stocks, but it's really rewarded me over time. Elevance has been good. When we look at Elevance over the 5 year, even with today's plunge, right? It's up 78% and it's up and to the right. It's had a few corrections, one in, post COVID, but you can see that it's had somewhat of a smooth upward rise. I like that about Elevance. So I'm going to use this as an opportunity to buy into this company. There's nothing broken with the company. And I bought 2 more shares today. I think at the current prices, I'll continue to buy into Elevance. It's a very good company. I'm glad to be a stockholder. And Mike, you owned Netflix. And Netflix deserves a lot of credit for kind of building the streaming industry, and they have done well. But look at this collapse. This was a great opportunity that I took advantage of. It dropped 73%. And this happened in the middle of 2022. And it was a great time to buy. I did so, and it really rose up 280% from that low point. That was a big opportunity, and I took advantage of it, and I cashed it out. I cashed out my Netflix earlier this year, did well with it. Thank you very much, and booked the gain. Not sure if it's going to go up higher beyond this, but you could see that the market has sold off this stock pretty significantly. And I do think that Netflix is a one-trick pony in a world where it seems like everybody wants to stream, including Apple wants to become a streamer. Of course, YouTube is very successful in streaming content from a variety of sources. I mean, you can watch movies on YouTube if you want. And of course, you can get, amateur stuff like yours truly through YouTube that you find interesting. So I think Netflix, you got Paramount, you got Peacock, you got Disney, you got a couple competitors out there that might, if anything, just make it a little harder to grow for Netflix. I still think Netflix is the powerhouse in the space for paid streaming. Netflix is awesome. So that is Netflix, and we mixed in a little Elevance into the conversation. Yeah, I think at the right times, Netflix is a great investment. It's just not a stock that I've thought that, it's just a great stock because it is kind of a one-trick pony, and it is a little bit risky in the fact that, they have to produce so much darn content, and it's very expensive. And if that content, let's say, if it isn't very popular and they don't get a lot of views, and maybe another media company comes out with more popular content, that could be one of the risk items to them, or it could be a situation where some of their revenues might go down over time. But we'll see how things play out with Netflix. Right. So that was Netflix there. There was a couple other companies that announced. Another one was Intuitive Surgical. And Intuitive Surgical announced after the bell. Looks like the market really liked what they had to say. Intuitive Surgical, let me read this here, develops, manufactures products that enable physicians and healthcare providers to enhance the quality and access to minimally invasive care in the United States. So they have, I think, a device that makes small incisions, and then they can do surgeries on people, which is pretty impressive. So it's a combination of tech along with healthcare. And the industry they're put into is healthcare, medical instruments, and supplies. Over the 5 year, they've done nicely, 168%. And they did have a nice pullback. that started in 2021 and ended in 2022. A lot of the market had big pullbacks, but they've had a couple of other pullbacks along the way. But for the last year, it looks like the stock really worked, up 72%, and then they're up another 5.73% in after hours trading. It is a big cap, 168 billion, and revenue is 7.87 billion. They are profitable. They have a high PE of 76, and then forward PE is 64. Analysts think it's a good stock, but it is priced at a premium, a slight premium. And then after tonight's price increase, it'll probably be a higher premium. So I've never really looked at Intuitive Surgical. Let's take a closer look from an income growth perspective. So their growth in revenue has gone up 31% in 2021. Of course, surgeries went down in 2020 because of COVID. And then 22, they had good growth rate. They had good growth in 23. So very good growth, very nice, stable upward chart. Pretty much right there with Netflix. Netflix was growing at like 15%. So very good. Their gross profit is really attractive. See, their cost of revenue is about 33% of their top line, and it leaves about 66% in gross profit. That's the sign of a valuable company. That's why their market cap is where it's at. Cash flow, see how they cash flow. So they've been cash flow positive for years. One little concern I have is cash flows are dropping. From 22 to 23, they dropped. So that is an item of concern. Got to understand why it's dropping. Looks like non-operating activities is one of the main reasons. Inventory, they're building up inventory. So I wonder why they're building up inventory. Their products, I imagine, are not perishable. They could be, put on the shelf for 6 months, 12 months. It shouldn't spoil or anything, right? It's instruments. They should be able to be okay on the shelf. So hopefully they recover that, but that's a pretty good rise in inventory. And that's what's causing the negative cash flow to appear, or I should say the amount of cash flow from year to year has gone down. It's still positive, but it's gone down from year to year. Okay, so based on that cash flow figure, let's say it was a 750. I mean, I cannot get close to the valuation of this company. The best I can do is like 20 to 40 billion, and they're way up there. They just don't generate a lot of cash. I would need them to generate about $8 billion to $12 billion of free cash flow per year. And was I looking at the data correctly? Yeah, I was looking at it correctly. So per year, they generate less than $1 billion of free cash flow. That's not very good cash flow at all. Interesting. So their valuation's probably based mostly on earnings per share. 22 analysts cover this company, and they do agree that it's either fairly priced or priced at a small premium. Right now, it's at a premium 1.52%. But if this increase holds tonight, it's going to go up. The premium will be higher. And some analysts are pretty pessimistic. They're way down at 318. The most optimistic analyst is at 575. So that's based on their price targets, and their price targets are pegged on their earnings per share. Earnings per share looks pretty decent, and they're going to grow quite nicely in the next couple of years. But this company here it just doesn't generate enough cash. I don't see companies that lack cash really go up to that mega cap level. These guys are already a big cap at their current valuation. They're successful. They keep selling their product. I agree. But it'd be nice for them to keep more of that profit in the form of cash. They don't pay a dividend, very high PE. So this one would be a pass for me, but a very interesting company. And congratulations to stockholders that own the stock, because it's going up today and it's gone up nicely over the past year. All right, looks like Brad joined. How you doing, Brad? Very good to see you. So, Mike, I have a lot on REITs. You think they'll do well next year? You think it is slowly trimming back? Interest rates are expected to fall next year, and that is going to make real estate a little more attractive because it seems like with lower interest rates, more real estate deals happen. REITs do pay a high dividend rate, so they become more attractive as a stock to buy. So hopefully you get good prices on whatever you're trying to sell off. I own one REIT. I don't overdo it with REITs. I own real estate outright and rent it out. Residential real estate. I rent out, and that's why I kind of control my real estate investment trust investments. I don't want to get overloaded on real estate and be too much into that particular asset class. But I could understand your position. Good luck with that. And hopefully you get good prices on the sale of REIT stocks. Good to see you, Brad. So you're interested in INFY. And they announced today, and is this the stock that I'm looking at? No, this is ISRG. So let's take a look at the stock you're interested in. So Infosys, I think this might be another Diggs, by the way, 7. Good to see you. Very nice that you checked in. Good to see you on Twitch. Thanks for joining. So these guys, I believe, are also an Indian company. And I reviewed an Indian company this morning by the name of Wipro. And yeah, I've known of this company, and they started in India. And India has a lot of talent around information services. So I totally get that these guys are a big player. They have a lot of employees. Let's take a look at the rest of their fundamentals. So they announced today. Let's see here. Yeah, they announced today, and so let me go over their business, and then I'm going to come back to the earnings. So what Infosys provides is predominantly services for companies that are buying software technology and are deploying it, or maybe they want a company that they can outsource a lot of their technology maintenance to. That would be a really good use case for Infosys. And India is a powerhouse for information technology people. There's a lot of computer scientists coming out of China, India, and there's a lot of engineers coming out of India. So they just have a lot of people, a lot of talent that Infosys has, working at the company. It's a $96 billion market cap company. It's 18 billion in revenue. It's very impressive. And we'll look at their revenue in a bit. So when we look at revenue, they've been growing nicely year after year. Their revenue has slowed down to some extent. Now let's look at what they announced. So they are from Bangalore, India. So they have that, location in India. And it looks like they grew at 3.1% sequentially and 3.3% year over year for the quarter. All right, so that's where they're at. They're kind of a slow grower right now, which is not exciting. It'd be nice to see them grow better. I mean, the economy's doing okay in the US, and I don't know about globally, but it'd be nice to see them grow faster than that. 3.3 is not overly exciting. Let's take a look at their free cash flow. So cash flow looks pretty good, 3.4 billion in the trailing 12 months. I would probably, value the company at 70 to 80 billion dollars. And they're at 97 billion. Over the 1 year, they're up 32%. Over the 5 year, they're up 113%. It's really hard to find discounted stocks these days. I think the market's fairly expensive. Infosys and Wipro are the two companies I looked at today that are in China, and they're interesting companies. There's most definitely Infosys is very strong in information technology services. I just don't know that it's really well priced. And I'm not a big like professional services investor. I think it's kind of a hard business at times because they have to constantly replace the project work that they're selling. Once projects are done, they have to go find other projects to sell. It's not like a software company that tends to have a very long lasting relationship with its customers. Those customers pay a reoccurring revenue. Infosys is not a software company, they're more professional services. So this company is interesting to take a look at. It most definitely is in the wheelhouse and the strength of Indian uh, companies that they have a lot of expertise. It just seems a little expensive to me. It'd probably be a pass, and maybe I'd watch it and maybe look for a much better acquisition price when it would be lower priced. So thanks for asking about Infosys. I don't know what your opinion is on professional services companies coming out of India. I'm very interested in looking at companies in India. India, the economy's been doing really well, and their stock market's been doing quite well. Um, so I want to learn more about India-based companies and probably start in industries that I really understand. And I really understand information technology. So that would be a place that I can get started in for companies in India. All right. So we went over Netflix. We've gone over Infosys. Intuitive Surgical announced. And let me go over TSM. Let's see where TSM ended up. TSM was probably the biggest story of the day. They came out with a very, very good earnings report, and their stock went up upwards of 10%. And their market cap, I know, is higher than this. This number is about a day old. And I'm sure overnight this is going to update. But the market cap should be, and maybe Google's updated it by now. Yeah, Google's got it at 923 billion. Uh, TSM is trying to get to, I don't know that they're trying, but the reality is they're probably going to get to $1 trillion if they keep going up in value. It was a very impressive earnings. They are growing their top line revenue. It looks really good. The stock's really worked for the past year. So the semiconductor space really took off on the news, and companies that semiconductor companies did well today. So this was the big news earlier. I thought the earnings were impressive, really high revenue growth. When you look at the quarter, the one small, area of concern is they did have lower revenues a year ago. So when you're comparing the most recent quarter, they're comparing it to kind of a weak quarter they had a year ago. So it makes this number look even better as they leave these decreasing revenue numbers. They're going to start comparing against higher, more difficult numbers. So the revenue growth rate will look lower, and investors should expect that. Over time, we'll see if they can continue to grow the top line like they are. If they do, they'll get to that 1 trillion valuation. But we'll see if they can sustain that. The semiconductor market's just been incredible how much it's gone up. I've been an investor in semiconductors for a long time, and I thought it was great in coming out of 2022, owning a few semiconductor stocks and watching them rise. Awesome. We got into 2023 and I felt like this isn't going to last. It's unsustainable. So at the end of 2023, I sold my Broadcom stock. I had owned TSM previous, like 2 years ago. I sold it before the big drop in 2022. And Broadcom really continued to go up. So I sold at a gain, but I left a lot of money on the table. There was a lot of money to be made on Broadcom, a lot of money to be made on NVIDIA, and of course on TSM. These have been excellent money makers for investors. So congratulations to those that own TSM, NVIDIA, Broadcom. Those have just been awesome stocks to own for the last 2 years. And Vassal, I looked at Netflix to start the stream. And if you'd like, you can watch the replay and go over Netflix. Thanks for tuning in. I appreciate it. And you bought a few calls before it closed. Very interesting. Yeah, take a look at the recording and you can see what I had to say on Netflix. So the other company that I wanted to point out that caught my attention was Uber. And I'll tell you why is I'm an Uber stockholder. And the story is that they may be acquiring Expedia, which is a travel site. And I don't like the idea, and neither did the market. The stock went down 2.44%. Uber is a really interesting company that has a very strong proposition. It's the best in mobility, ride sharing number one. And they're trying to take good market share in food delivery. Whereas Expedia is, a travel site. Not to demean that industry. There's a lot of competitors there, a lot of competition. Where Uber doesn't have a lot of competition in mobility. Yeah, they have a couple competitors, but Uber is dominant. They have the biggest network. They've formed a partnership with Alphabet Waymo, and they're going to have Waymo as a technology to hail robo-taxis in 2 cities to get started. That's really, really incredible. And that's a really exciting area for their business. If they could start robo-taxi service on Uber, that's going to be awesome. So for them to acquire Expedia is almost like a big step backwards. They're going into a space that's not really profitable, not really exciting, overly competitive. And Expedia is way behind Airbnb, way behind booking.com. So I'm hoping that it's just a story that doesn't happen because I'm an Uber stockholder. I love the company and I don't like the idea of them acquiring Expedia. So that came out. Looks like Keo 21 was looking at NVIDIA 10 years ago and never invested. You were thinking AMD, NVIDIA competition was going nowhere. Boy, were you wrong. And boy, was I wrong. I've known of NVIDIA for 20 years. And I owned NVIDIA probably about 10 years ago, 8 years ago, and wasn't overly impressed. I just never thought that they would ever achieve kind of like the cash flow status that the other semiconductor companies had. And my knowledge of NVIDIA really became high when I actually bought GPUs for my son who was mining Bitcoin. This is 2016 era, 2017. And he wanted to do that in his room. He was, I forgot how old he was, maybe 14. And that was a little project, got those GPUs. What I found interesting was we used those GPUs for a while, sold them, and we sold them for more than we had acquired them. So that should have told me something that, whoa, there's strong demand for these GPUs. Fast forward, yeah, there's strong demand for those GPUs to the point where NVIDIA is just incredibly valuable now. So we'll see how that plays out. It's been an incredible story and one that I missed. And, I think a lot of people jumped in just kind of with a little bit of blind faith and it rewarded them, and good for them. I didn't, and just watched from a little bit of afar. I did own Broadcom during the big pump up partially. I sold too early, and Broadcom did do well, but not as well as NVIDIA. NVIDIA has had an incredible rise. All right, so we talked about Uber. Those are the big names that announced. Let's take a look at tomorrow's earnings and see what's in store. We're in earnings season, so it's just going to keep coming. It's not going to stop. Tomorrow morning, I'm going to stream again. We got Procter & Gamble, good old school company. these are all staple kind of products, Procter and Gamble, stuff to clean your house, stuff to shampoo your hair, that kind of thing. And it's kind of a boring category, but this is a big, big company, 407 billion. American Express, financial services. Let's see what they have to say. Schlumberger, which is they do services around oil. I'm expecting that's not going to be overly exciting because oil prices have been going down. So that one there might struggle a bit in the morning. There's a bank announcing, and then Ally. I started buying into Ally. I think Ally was really sold off and became an opportunity for me. I only own maybe $2,000 of Ally, and I'm looking forward to seeing their announcement. The economic data that we received this morning was that there's people are employed. The unemployment rate is slowing down. So there's plenty of jobs. And the retail report is showing that consumers are buying. Retail sales are growing. So those are facts that say the economy is in good shape. Ally, they are in the business of doing consumer finance, predominantly automotive finance, as well as a bunch of other services. And I think they're going to be in good shape. If the consumer's in good shape, if the economy is good in 2025, Ally is going to do well. And when we look at their chart, it really is a beaten down stock to some extent. It has rallied recently, but it's good to see stocks that get sold off like this. You could see this big sell off here. Let's look at the 6-month. And from the big sell off, which was a report that the consumer was struggling, sold off 24.36%. And the rise from there has been about 9.7%. I think it's on its way up. I think it's going to recover that drop and then continue if the economy is good. For the 1 year, it's still doing well, up 41%. And Ally I've owned, for a while. I owned it, sold it somewhere around here, cashed out, and then it drops. So I'm willing to buy it again and make money on it again. So we'll see. So I'm going to keep an eye on that particular earnings in the morning. But there'll be plenty of companies to look at. So that's ahead tomorrow. And then nothing in the afternoon. Rarely do you see a company announce on a Friday after the market closes. I think that's pretty much nobody would pay attention. Everybody's ready to take the afternoon off and ride into the sunset and enjoy a weekend. So it's earnings season. It's really interesting to see these companies just continue to announce. Today's big news was Netflix. It announced, it grew. It's showing that they're really a dominant force out there. It'll be interesting to see over time if Netflix and YouTube kind of become rivals, so to speak. I think right now they kind of go at it very differently, but we'll see what happens. Netflix has their ad-based service where I think subscribers don't have to pay anything, similar to Amazon Prime. Like the one that I get is, in addition, there's no additional cost to our Prime membership, but they do put ads in there, and I could pay a little more money, and then it takes away the ads, but I don't watch it enough to pay for that. Netflix is now similar to that, where they have a free service where you watch ads, where they have the traditional service where you just pay and you don't see ads. That's the one that I'm on. So they started that, and it's interesting to see how that's come into their business. Hopefully that works for them. All right. So sorry about the commercials there, Mike. So as I was saying about Ally, I think the drop in Ally for the last 6 months created an opportunity for me. It dropped 24%. I've been following Ally for 5, 7, 8 years. I actually knew the company before they were called Ally. They were called GMAC Finance, or I think that was their name. Then they rebranded because they stopped having the part of their business that was the mortgage lending arm, and they went back to predominantly doing auto finance. And over the years, I've owned the stock, and I've done recently. I did really well because I bought when the buying was good, and then I sold, before it had these problems. So I got out, and now that it's dropped, I think that the economic situation's changed from the time it's dropped. When it dropped, the news that we were hearing was the consumers beginning to struggle, and that struggle is going to turn into losses for um, Ally. Well, now we're getting economic reports that people are employed, there's plenty of jobs, the consumer spending, consumer sentiment is better. So all those things I take into account along with the discount. So I'm a buyer of Ally. I've been buying, a few shares, and we'll see where they announce tomorrow. We'll see if that was a wise move on my part. If we get a positive report, that just means this stock's going to continue to work and go up and to the right. So that'll be one that I pay attention to. And yeah, it was GMAC. And I remember them because way back when I think the original mortgage on the house that I'm standing in was through them. So that's why I remember them. And then they sold the mortgage to somebody else. And I stopped sending our mortgage payment to GMAC. All right. So good stuff. So that is the live stream. If there's no other questions, I will land the plane and let you guys enjoy your Thursday evening. You want to continue the conversation, get on Discord. Discord is really, really packed with good information each day. There's other investors on it. Just be careful. A lot of scammers on Discord. So be careful not to get scammed. If somebody pretends to be me and they reach out to you, it's not me. It's somebody else trying to bait you into getting in conversations with them and eventually trying to scam you. But it's a very good place to, get ideas on investing, share your ideas, ask questions, all that good stuff. And you want to kick up your involvement with this community, consider being a community member, a paid member, and you can join member-only calls where we'll do workshopping around looking at financials, valuing companies, as well as an investor call where we review topics of the week. I'm sure we're going to talk about earnings this Sunday when we get together. You can be involved with that if you're a paid member. So consider that. Take a look at the details in the live stream details. So Brad, thank you for joining. Mike, thanks for coming. Gabriel, very nice to see you. Thanks for joining. You guys all have a nice evening, and I will see you on the next live stream. Take care.